I'm ready for what I think could be a huge gold and silver buying window coming soon. More physical gold, more physical silver, more mining shares, and the debt ceiling may be what gives us this opportunity. Hey everyone, thanks so much for watching Yankee Stacking. Sell in May and go away. That's an old Wall Street saying which refers to the weakest 6-month period for the stock market, historically speaking. It usually ends in November, but the summer doldrums also affects precious metals. And I think this summer will be a great time to take your gold and silver stack to a whole nother level. I've been expecting a significant pullback. Okay, maybe I've been hoping for a significant pullback so I can finish my golden herd of 1-ounce buffaloes. But I think this drop could get much more pronounced. And here's why. First, recession. Corporate earnings are indicating that recession is here. We gold and silver stackers knew it was already here, but everyone else seems to be waking up to that fact. The question is, how bad is it going to get? Well, in my opinion, super bad. Second reason, interest rates. There's no clear sign of a pivot by the Federal Reserve. I think the pause might be in, but until rates get cut again, I don't think we're going to see $2,200 gold or $30 silver anytime soon. Third, bank health. You know, the Biden administration, the Fed, the Treasury, they've all conspired to do their best to squelch worry over bank runs. You don't hear a lot about that in the news now, do you? But is that threat really over? Heck no. If the Fed keeps rates high through a recession, bank failures are going to accelerate. And finally, we have yet another debt ceiling battle. If we were to default on our U.S. debt obligations, gold would probably go way up. But let's get real for a minute. How likely is a so-called debt default anyway? Not likely. The U.S. Treasury Department said on Monday it thinks it can pay the government's bills through June 1st without a debt limit increase. I'm laughing because it's like, pay our bills? Are you kidding me? We can only service the interest on our debt and only by borrowing more money to do it. That's not paying our bills, okay? It means we're broke, folks. Broke. We can never, ever pay off the principal short of inflating the dollar into oblivion. In the long run, our debt has doomed our dollar, period. Gold and silver are your best protection. In the short run, well, I think Congress will no doubt increase or suspend the debt limit, something they've done 78 times since 1960. And when that happens, maybe, I don't know, after the July 4th congressional recess, I really think gold could break back below $1,900 and silver below $22 an ounce. I'm going to be buying all the way down. But I do think a huge buying opportunity is returning. Let's run some of my thoughts by a sponsor of mine, Tim Smith, CEO of U.S. Gold Mining, and catch up with what has happened with his company's stock in just over 2 weeks. Hi, Tim. Thanks for coming back so soon.
Thank you so much for having me. Real pleasure to be back.
Today, I want to talk to you about the debt limit and the so-called crisis that's coming. Janet Yellen said the Treasury only has until June 1st, and then it's all over, Tim. You know, we hit the $31.4 trillion ceiling back in January, and now if they can't issue more IOUs, we're just going to default. Game over. What do you think of that?
Yeah, look, interesting situation. Now, I'm an optimist. I'm an explorationist. I do expect a deal will be reached. Certainly, there's plenty of precedent for that in terms of last-minute deals having been struck in the past. And if that happens, I certainly hope the Republican-led Congress should get some of what it is seeking in terms of reduction of federal federal spending. But
So it's not going to be any different this time around.
well, we will wait and see. I don't want to call it, but I think the key for us is that the major consequences and repercussions if the U.S. government does go into default on that debt, and expect gold to break out. That's kind of the key takeaway message. We're going to see major upward pressure on the price of gold. And I think, the key there is the ongoing uncertainty will continue to drive safe haven flow towards more gold buying. We see this time and time again. We saw it most recently with the regional banking crisis, Silicon Valley Bank, as one example. Safe haven buying of bullion spikes during these times of economic turmoil. And, there's lots of economic data coming out, reported just yesterday by NASDAQ. There are more recession fears. We saw reports today out of Canada. Inflation was back up in April. We're being told that inflation is easing over the last couple of quarters, but, we're all buying gas at the pump and groceries for our families. We know it's still out of control, and that is continuing to impact the strength of the dollar. And therefore, that is supporting and driving the price of gold higher also.
How about just abolishing the debt ceiling altogether? Just get rid of it. They keep raising it. Why not just get rid of it totally?
Well, there has to be the appearance of some limit on debt. I mean, ultimately, I think we'd all rather see much more stringent fiscal measures and controls in place. And yeah, certainly more limits on government spending, more reasonable. I think, we're all on board with these reductions that we need to get government spending down.
I heard another interesting idea on zero hedge. This was back in February. Congress could amend the Gold Reserve Act to change the value of the gold held by our Treasury from, I think it's $42.22 an ounce to gold's market value. The Treasury supposedly has, I think, 261 million ounces of gold, and they made it say, $2,000 an ounce. Congress could free up $500 billion in new cash without raising the debt limit. What do you think of that idea?
Look, I haven't heard that, but that doesn't sound like a silly idea. If that gold is sitting there in a vault, and it can be monetized at current market value, why not look at that? Look, I think what we're seeing are a lot of factors that are supporting the current base of the gold price, and what we're really seeing is that it is building at around 2,000. Certainly, there are day-to-day fluctuations, but the last 6 weeks we've seen it between about 1980 and as high as about 2050, and it's going to continue to build that base. The longer term it sits there, the more it is building that base, but it is ready to break out. And I would double down on that statement. In my 28 years in the gold mining industry, I don't think I've ever seen a setup like this current economic situation as a precursor to what we think is going to be a major bull market in gold. And there's a few reasons for that. Let me break a couple of those down for you. One is that gold supplies are reducing. We're seeing that the largest gold mining companies are not replacing their reserves, which are in fact depleting as they mine their way through those reserves. And I just spent the last 6 years before coming to work with U.S. Gold Mining, working for two of the majors, first Goldcorp, and then via the merger with Newmont, I spent 3 years with Newmont, which is, by the way, the world's biggest gold miner. And the only way Newmont can continue to sustain its gold production is from acquisitions. I know this because I was the head of generative gold exploration for Newmont North America, and I can tell you they really aren't exploring. They're just not putting the budget and the effort into discovering the ounces that they need to sustain that production. Another factor, it's very well documented that the central banks are starting to load up on gold. The World Gold Council has reported over the last few quarters increase in demand. And this is the highest amount of central bank buying that we've seen since 1950, I believe. Of course, there's geopolitical tension ongoing around the world. And, finally, I guess you don't just have to take it from me. Some of the biggest names in our industry are calling for a major increase in gold price. So Ross Beatty, as one example, said earlier this year that he thinks gold is going to blow through its previous highs and sail into new territory. probably this year, 2023. Pierre Lassonde, who of course essentially was the founder of the gold royalty system, was quoted over the past year saying that gold will hit 2,400 in the medium term, but over the next 5 years it could get anywhere upwards of $10,000 and up to as much as $25,000 over the next 30 years. These are some of the biggest names in the gold industry, and they've made their fortunes in exploring, building, and trading in gold companies.
The last time we talked, I told you that I bought shares of gold mining back in January 2022 after interviewing Alistair Still. But after you and I talked about your new spinoff, the U.S. Gold Mining Inc., that just IPO'd on the NASDAQ, I have to admit, Tim, I didn't buy any shares. I put you on my watch list, but I missed out on a massive 50% run up in 2 weeks. I'm kicking myself, Tim. What happened?
I was going to say, you put it on your watch list. You watched it go up.
I did.
Well, look, let me outline why there's plenty of runway here for it to continue to go up. I first just want to recap on a couple of the key fundamentals. So the Whistler Gold Copper Project, located in Alaska, great jurisdiction. We believe it's a unique opportunity. Just our geologists have been working on the interpretation. They've keyed into a really high-grade core that sits in the system, which is going to help us unlock value via our exploration this coming summer. The asset overall is 3 million gold equivalent ounces in the high confidence indicator category, and another 6.4 million gold equivalent ounces classified as inferred. That is a combination of about 70% gold, almost 30% copper, and some silver. So great diversity there, and exposure to upward price pressure on all of those commodities. And overall, just great size, great location, great exploration upside in a safe jurisdiction. Our market cap right now is about $180 million. If we back our cash out of that, we're left with about 160. So that's our enterprise value of the gold ounces in the ground, which is in total about 9.4 million ounces. So quick division there, that works out at somewhere around $16 to $17 per ounce in the ground. And the takeaway here is that when you compare that with the global median of about $40, sometimes $50 per ounce for equivalent deposits at a similar development stage, then there's a big delta there, right? From 16, 17, 14, 50. So how do we get there? Well, we launched this summer. We get into the field. We start the drilling program. There hasn't been any drilling at Whistler since 2011. We focus on the high grade, which is where the real value drivers are, the real value proposition. We expand that. We delineate it. We show that we can de-risk the property, and we put it on a path ultimately towards mine development. As we do that, we will certainly see that re-rate towards $40 to $50 per ounce, with the first major milestone being a preliminary economic assessment. Fancy word for essentially a mine scoping study. It's the first study that takes the metal in the ground and maps out how you would build a mine from that. As you get into more detail for that, we talk about a feasibility study. So this is preparing the project ultimately to finance the development of that mine. When projects get to feasibility study stage, they typically start to trade around $100 per ounce or in excess of that. And as an example of that, in a previous role, I was the VP of exploration for a company called Kaminak Resources. In 2016, we made a discovery in 2010, a big discovery in Yukon called Coffee Gold Project. In 2016, we defined that feasibility study. Goldcorp subsequently acquired that project for 520 million Canadian, which equates to about $130 US per ounce in the ground. So, from a discovery, $0 to $130 per ounce within the space of about 6 years. And, we see numerous additional examples over the past few years where large companies have paid well over $100 per ounce for quality ounces in the ground in good, safe jurisdictions. And, that's why we think our IPO was a really successful launch at $10 per ounce. People could see that was attractive. I think people in the last couple of weeks have really cottoned on to the fact that there's that big delta between where we launched at 10 and where we're heading next, $40 to $50 per ounce. But, there's still a lot of significant room for growth in the longer term. A company in a safe jurisdiction, Alaska, all the infrastructure that the state is willing to support with. They want to build a road directly to our property, a quality asset, and a rising commodity cycle. We think the stars are aligning here. It's a lot of great upside for this company.
That sounds great. Check out U.S. Gold Mining Inc. The ticker symbol is USGO. It's on the NASDAQ. Your trading app should work. And Tim, what are we going to meet in another 2 weeks? And I'm going to see your stock price double again. No.
I would love to.
I would love to see that.
Yeah.
All right. Thanks again so much, Tim. I really do appreciate it.
Thanks very much.